I think this is just such an amazing opportunity and gig for a post MBA student who wants to be an entrepreneur. This notion of buying a business and starting on first base rather than starting in the batter's box. They get to lead as a CEO, they learn a ton, they have a crack, no guarantees whatsoever, at some money, and they bring nothing to the table. In some ways, they don't have experience, they don't have ideas, and they don't have capital. I tease my students, this is absolutely perfect for you. You don't have anything to bring other than their just sheer intellect and ambition.
Search Party is sponsored by Avid Bank, Boulay, Mayer Brown, and Plexus Capital. The lead sponsor is Next Coast Legacy. Hello and welcome to Search Party. I'm David Snow, your host, and today we're joined by AJ Wasserstein of the Yale School of Management, Dustin Sellers and Anthony Walker, both managing partners of Next Coast Legacy, a leading ETA firm. Gentlemen, welcome to Search Party today. Thanks for being here.
Thank you so much, David.
So AJ, we are super stoked to be talking to you. You are one of the few academics who has really done a lot of work in the search fund space, in the entrepreneurship-through-acquisition asset class. And so we'd love to hear about, the theoretical underpinnings. And of course, we have Dustin and Anthony, both, experts in the ETA world. And AJ, I know that in addition to, more theoretical, quantitative types of work that you do, you're also very interested in the personal choices and the personal life of people who choose to become searchers and kind of what that means for them and their family and their quest for happiness, frankly. You are the Eugene F. Williams Jr. Senior Lecturer in the Practice of Management at the Yale School of Management. And your topics are entrepreneurship, programmatic acquisitions, small businesses, and search funds. Tell us what the enthusiasm is at Yale School of Management for ETA. Have you seen it change over the years?
First, I'll deferentially thank the Williams family for endowing this chair, but that's a long title. So I teach 5 courses at Yale, and they all sort of are cousins of ETA, Entrepreneurship Through Acquisition, and search funds. I'll use those terms interchangeably. There are 60 students in each course, and I've been at Yale for 8 years, and I've been fortunate in that the classes fill up. I think more people are actually operationalizing the framework and models post-graduation. So we're seeing a handful of students every year do this, and some of those are directly out of graduation, and some are called boomerangs. They're 1, 2, 3 years out and coming back and doing it after a brief stint somewhere else.
AJ, obviously you've been teaching this course for quite some time, and we're one of the pioneers in this space, but we have seen a proliferation of the curriculum moving from primarily just being taught at Stanford and Harvard to now having courses taught at most of the major top 25 business schools. And that is a trend that I think is certainly influencing the interest in the space, because there's a greater and broader awareness of the reality this is an interesting career path that people can choose post-business school, where it was somewhat siloed only to a few universities and plus Yale through much of AJ's work for a period of time.
I think that's true, Anthony. I'm really excited about that because I think there's sort of a democratization of ETA in multiple ways, gender, ethnicity, school, age. It's a model and framework that's open to a lot more people in a lot more ways than it previously was. And as an academic rooting from the sidelines, I think that's phenomenal. I think more people that can get engaged is really exciting.
What AJ brought up, which I think I'd love to plumb a little bit more, is what he called the boomerang, and we call executive searchers, because both Mike Smirklo and I, both partners at Next Coast, we're both boomerangs, early 30s, and kind of were introduced to search well after graduating from top business programs. So that's an area that I'm really excited about, because I do think folks are becoming more aware, second stage of their career, this is a real option.
I think of ETA now as a pretty big tent with lots of little corners of sub-specialization and models within the model. And there's sort of this big pond now where everyone can find, both as investor and entrepreneur, so what works for them, what resonates for them, but it's not quite a one size fits all anymore.
So AJ, it's time to reveal to our listeners that you also are an entrepreneur. You have built and sold at least a couple of businesses. What drew you intellectually to the subject of entrepreneurship and search, and what continues to keep you engaged in this topic?
I think I'm really interested in ETA search funds academically and intellectually. It builds on my experience as a practitioner, as an entrepreneur and CEO. So it sort of very much dovetails into what I did when I was leading, operating, and scaling a small business. So I love this pond because these are human-sized businesses. So it's very easy for me as an academic and also for an entrepreneur to get their arms around a business and understand what a $1 to $3 million EBITDA business with 25 employees looks like and feels like. So that's really cool. I am unabashedly entrepreneur-centric. So my primary audience is entrepreneurs. I think this is just such an amazing opportunity and gig for a post-MBA student who wants to be an entrepreneur. This notion of buying a business and starting on first base rather than starting in the batter's box. They get to lead as a CEO. They learn a ton. They have a crack, no guarantees whatsoever, at some money. And they bring nothing to the table in some ways. They don't have experience, they don't have ideas, and they don't have capital. I tease my students, this is absolutely perfect for you. You don't have anything to bring other than their just sheer intellect and ambition. So I also love that this is sort of dispassionately and rigorously based on economic characteristics. And I also think it's just this really cool intersection of operations, leadership, finance, capital allocation, and you get to use all these skills immediately after studying them in a classroom. When you're running a small company like this, you really get to make a positive impact on the company, the communities in which they operate. And I hope, and I say this with a gender neutral tone, even though I'm going to use the word guy, but I hope this is good guy capitalism. I hope people are doing this to really build wonderful companies, create jobs, and serve customers, serve team members. So this is just really exciting as an academic and as a practitioner. I think there is just a wonderful macro opportunity here. So the US Census says that there are 1.9 million companies in the United States with 10 to 100 employees. And those are exactly the types of companies search funders are hunting for. So I'm going to be cynical, I'm going to be pessimistic. Let's just say only 1% of those companies are remotely possible to acquire. Those are 19,000 companies. And let's just chop that in half to be ultra conservative. Maybe there are 10,000 companies in the United States that might have the characteristics of being desirable to a search fund entrepreneur. And they're not all for sale. Some are too big, some are too small, but there's a big pond here that you could potentially go fishing in. Despite the size of that pond, and we talk about why this is so popular and how many people are doing it, the truth is only about 2% of graduating MBA students from top 20 programs are doing this. It's still minuscule numbers. So there's this massive opportunity for people who want to do this to go look for targets. There's this incredible chance to buy companies at mid-single digit EBITDA multiples, call it 5, 6, 7. The data set we work with has exit multiples that are averaging low double digits, particularly 13 times. That's just a wonderful undercurrent to think about playing in this pond, either academically or as a practitioner.
One thing that Anthony and I talk a lot about is the development of the soft underbelly of the economy of the US, and that ETA is the tip of that spear. The number of businesses that have been created by, the greatest generation or, their children that don't have a succession plan, and they're sitting around in their fishing boat still running their business, wondering who's going to actually take this great $12 million plumbing business in St. Louis to the next level. But this individual has a legacy and wants someone to take this business over. But all their kids went to top business schools and went to top undergrad programs, and they don't want to go run this business. The irony of it all is there's amazing economics that AJ just pointed out. I mean, middle market would give anything for that type of spread, right? So what he's describing is kind of the best of both worlds, which is there's a huge opportunity and there's this group of growing individuals who are crazy enough to want to go run that business in St. Louis, but they also understand the economics, and they're giving this great set of businesses that don't have anywhere to go and are kind of stagnant in their growth this opportunity, this shot in the arm, so to speak. It's very American. It's very American, and we're regenerating the entrepreneurial zeal in our country kind of from the bottom up. I'd actually love to ask AJ kind of a deeper question. What are those kind of core fundamentals you see that create that success, irrelevant of ethnicity, irrelevant demographics, socioeconomic elements? Because I do see this episode and this platform as a way to talk to folks kind of outside the top business school programs to try to understand whether they fit or don't fit.
I don't think this is an IQ test. I think this is much more an endurance test. So you need to be smart enough, but I'm not sure you need to be a genius. I prove that. This is successive marathons. I think it's really, really hard to imagine doing this if someone doesn't have off the charts grit, sustained commitment to a cause over very, very long periods of time. And I always talk to students, aspiring entrepreneurs, about trying to reflect if they've demonstrated grit somewhere in their life. Did they work full-time while going to college? Did they teach themselves to play the trombone? Did they teach themselves French? Did they do a marathon or ultra marathon? I once had an entrepreneur tell me they lost 100 pounds. That is grit. Most of what you do when you're the CEO of a small business is deal with people all day. You're dealing with customers. You're dealing with, I call them team members, employees. You're dealing with vendors. You're dealing with the bank. You're dealing possibly with community people who have a interest in your business. There's also this baked-in notion that you're going to deal with people of all sorts of different levels. You're going to deal with people who didn't graduate from high school, maybe didn't go to college. You're going to deal with people at the bank or your investors who are MBAs from top schools and think very broad and conceptually. And being able to zoom in and zoom out and deal with a wide array of people, I think is really important.
Dustin, I think that very much resonates. And, one of the other elements that you and I spend a lot of time talking about in evaluating when we're speaking to searchers is this concept of coachability, right? We almost assume that if you graduate from a great business school that you have the requisite IQ and capabilities to do the job. But there can also be a negative to that in that it somehow produces overconfidence and it renders a student or a professional with a perspective that they think that they can do it by themselves. And AJ, to your earlier point, fundamentally, these are first-time CEOs. ETA entrepreneurs, searchers are not most of the time folks that have done this before. And so there's a tremendous benefit to the group of investors that they often assemble that fill in the gaps in their professional backgrounds, their work experience, their knowledge and awareness of how to run and manage small businesses. But if you're not coachable and you're not willing to accept the guidance and the perspectives of those individuals, it's for naught. AJ, I'm curious how you think about evaluating that particular characteristic and ferreting that out as you're talking to entrepreneurs and folks that you deal with in your class that might be interested in this as a career path.
One of the questions I think is worthwhile asking potential entrepreneurs is what they read, where they learn, where they seek guidance, trying to suss out how entrepreneurs are continuing to develop even outside the academic context, either as an individual or as a professional. And to me, that points towards someone who's seeking knowledge and trying to work on some improvement.
The one defining characteristics of most searchers is that they last longer, right? And they can continue to fight through the adversity. Intellectual curiosity, I think, is part of what drives that. It's that kind of consistent commitment to learning and to turning over that next business and really trying to dive deep and uncover what makes it special. If you don't have that, this becomes very difficult to sustain the level of effort that's required to, one, get a deal done, and then certainly to drive to a good outcome in operating the business.
I'd love to dig into a bit more detail on sort of the structure of traditional search funds, entrepreneurship through acquisition models, because in the world of investing, there is the subset of investing that you can call private equity, broadly defined. But within private equity, there's a very specific model for traditional search. What is the innovation that allows search funds to exist as a distinct asset class?
That's a great question, David. I think what distinguishes them as a unique asset class is the size. This is really the bottom of what we might call the middle market. Fundamentally, the model has not really changed that much for traditional search funds over the past couple decades. So there's this flood of people, aspiring entrepreneurs, who are entering this. In 2023, Stanford says there were 94 new searches formed. I think that's probably an underestimate. And if you include self-funded search, incubator, there are hundreds, plural, hundreds of these popping up every year. This is very actionable. So it's much more actionable now than it was when Dustin did it, because there are courses, there's a proliferation of conferences, information, blogs, podcasts. There is more information than someone can possibly synthesize and digest. And it's pretty mainstream. So at Yale, the Career Development Office, which we call the CDO, they have a talk track around search funds. So you are not an outlier anymore. So there's this flood of people coming in. And I think part of what draws people to that is this wonderful culture. So this is a really nurturing environment where seasoned investors, seasoned entrepreneurs really pay it forward to people who are entering and figuring it out.
I think about what made search special or unique relative to PE, private equity. And I might think about three different characteristics. One, AJ alluded to, which is size, right? You've heard folks refer to search and ETA as micro PE, right? Businesses that are on the lowest end of the lower middle market spectrum of investing. The second, and AJ touched on this one as well, is culture and community. ETA is this really interesting synthesis of professional investors and a lot of former operators turned investors, as well as academics, that are all surrounding young entrepreneurs with the resources to be successful. And you get the benefit of the shared experience and the lived experience of each of those groups of people. I'm very fortunate every day to be able to work alongside Dustin as a former operator that has such a wealth of experience from a value creation standpoint in running and managing his businesses. AJ similarly, as a former operator, and I get to sit on the board of a business with AJ. But it's a unique experience to be able to pair kind of investing acumen and backgrounds in financial due diligence and underwriting with real world lived experience of running businesses. And we know that the majority of the traditional private equity market is filled with career financiers, which is very different than someone that's actually run a business and has actually sat in the driver's seat to deliver that value creation that all investors ultimately look for. And then the third, I would say, is really career path, right? Search entrepreneurs set out on a journey to identify one business to buy and to operate. They step into the role of CEO. In most traditional private equity frameworks, there is a financing company that is buying a business. They're often leaving the existing management team in place and providing capital, growth capital, to go on the next leg of the journey. That is very different than forming a relationship with an entrepreneur saying, hey, we want you to stay on for a defined period of time, but then I'm going to be the CEO, I'm going to take the keys, and I'm going to run the business for you. And so from a seller's standpoint or a business owner's standpoint, those are very different kind of opportunities to exit your business. One requires consistent and continued engagement over a longer period of time. The other is a transition of your legacy to someone else that is solely interested in running that business. And yes, they will exit and sell it over time, but it will be on the back of kind of their hard work in taking that business to the next level. And so it's a really interesting model that incorporates a lot of different people, a lot of different folks from different walks of life and different perspectives on how to drive value creation. You know, the other differences are more nuanced structurally. And then I might actually break the search or ETA journey into 3 different time periods. The first is the search phase, where you almost have a job in sales, right? Like your sole job as a searcher is to convince another business owner to sell you their business and to let you run and operate it. And that takes an entirely different skill set from the other 2 phases that you'll also have to be good at, right? You have to fundamentally do financial due diligence and underwrite that asset. That looks a lot like private equity. And then you have to run the business and stepping into the role of CEO. And so there are 3 very unique phases, but at least 2 of those, the search phase and then the operating phase, when you're stepping into the role of CEO, look very different than traditional private equity.
Let's take a quick break to learn about a financial and wealth advisory firm that you should consider if you want to succeed in the entrepreneurship-through-acquisition market, Boulé. Since 2005, Boulé has been committed to the search fund ecosystem, working with hundreds of ETA entrepreneurs across North America and Europe. Its unique tenure in the ecosystem means Boulé are uniquely positioned to partner with you across the entire life cycle of the ETA process. Even before the LOI is signed, Boulé is your trusted partner, offering guidance and discussion points as you evaluate an opportunity. Boulé can lead your quality of earnings due diligence, giving you and your investors confidence that you're buying what you agreed to buy. Post-acquisition, Boulé remains at your side with assurance readiness services and assisting with financial and tax reporting or other consulting needs. Wherever you want to go with an investment, the friendly, trusted advisors at Boulé will help you get there. Look for commentary from Boulé experts in coming episodes of Search Party. Okay, now back to the episode.
Yeah, I'd love to kind of connect a couple of dots here, because one of the attributes that AJ talked about that critical to a searcher is the grind, right? The word I always use is tenacity. You get blown up and you get the bricks knocked off of you and you just get back up and you start walking again. Trying to find a business that's actually going to create the return profile that you want and make the money that you want is really, really hard. And then going to running that business with a group of people that are in an industry that you don't know and in markets you don't know, and really are not at the same socioeconomic or demographic profile that you've ever actually encountered with, that you've worked with most likely. That journey of getting pulled through the small hole creates a natural community that is very much pay it forward, right? I mean, AJ, my hourly at Pro Service is probably like $8.74 against what my return profile was, even though it was a very good return profile because of the amount of hours I worked. My nickname was Uncle Daddy for the first 3 years of my children. But that's Anthony's point about this intersection of finance and private equity with lower middle market America and business is probably one of the most beautiful things, because our community is bridging that gap and we're doing something truly unique where circles and squares never could match before. We're creating an environment, and through folks like AJ teaching this and creating an environment that is inclusive. If you are a grinder and you are a self-starter and you are always willing to bet on yourself, there's money there for you. Like, go do this. Don't be afraid of this. It's out there. And I think it's more than 10,000 businesses, but whatever it is, the numbers are in your favor if you've got those characteristics. And the community is there to help you.
Everybody agrees that it takes a certain kind of a person who wants to be an ETA searcher. Of course, in traditional big private equity, they often have a delineation between the deal guys, used in a non-gender way, the deal guys and the operations guys. One group of people go out and they find the investment and then it gets handed over to people who add value. But down in the lower middle market and with ETA searchers, you're kind of doing the whole thing yourself. AJ, I mentioned earlier that a lot of your work that is listed on your Yale School of Management page, a lot of it involves just the personality and the life goals of searchers. And you talk about the Maslow's hierarchy of needs as being relevant conversation to have with someone who's thinking about embarking on the
Self-actualization,
on the search journey. Self-actualization. What does that mean in a nutshell, and why is that relevant to the world of search?
Yeah. So, one, thank you, David, for being a reader, or at least a skimmer of my bio page. Two, I'm sort of weaving in my liberal arts background into the business world here. The goal of this is to operate a business. It's not about searching for a business, which is not a particularly pleasant process. But in terms of time, the search is relatively short. The operation of the business is really the heart of the journey. And fundamentally, this is about building a life. So it's really about people in their early 30s after getting an MBA. It's about constructing a life. And part of that life is financial. I am unequivocally a capitalist, and I wish financial independence on all of my students. But I'm fascinated by how young adults make choices and what they say they want in a life. And then they go work for a consulting firm or an investment banking firm when they articulate they want freedom and financial independence and control of their calendar and all these things that those career choices aren't going to give them when ETA will give it to them. So I'll talk about Maslow's hierarchy for a second. So I think that the most rewarding part about being a CEO, and I'd love to hear Dustin's thoughts on this, is not making a pile of money. So if you think about Maslow's hierarchy of needs, as Dustin just said, the tip of the pyramid is self-actualization. So this nirvana state of being the best person you could be. I think when I was a young entrepreneur, I thought that self-actualization would be sort of financial success. But if you run a business, someday you wake up and you realize, this business is real and I'm worth a chunk of money. And it's not particularly motivating anymore to measure exclusively by dollars or IRR. What I think is the most exciting and fulfilling part of being a CEO for enlightened people is watching the organization become bigger than themselves. Watching people within the organization grow and thrive and take on new leadership roles and new responsibility levels that you never imagined as a CEO and the employee never imagined. Wonderful things happen in the business every day that you have nothing to do with, not because you're not interested, but you've built a culture and a system and a process that's much bigger than yourself. So seeing people grow within the organization, seeing people make life choices like getting married, buying homes, having children, knowing that they had a stable place to work and they were enjoying that work, to me, that is the very best part of being a CEO and the top of Maslow's hierarchy. So I wrote this other thing called Exploring Work-Life Integration, and we intentionally didn't call it work-life balance because I'm not sure there's always balance, but there is integration. And we talk about 5 F's and family, friends, fitness, fun, and faith, and how you integrate those into your life as a CEO. Because I don't want my students to be the richest divorced people or the richest people estranged from their kids. I unabashedly want them to have it all. I want them to thrive as spouses, as parents. I want them to be physically healthy. If they pursue spirituality, I want them to have that in their life. But thinking intentionally about these 5 F's is really important and a big part of being a CEO. I want students to go into this eyes wide open. This is a really, really hard journey. So I don't want to sugarcoat this in any way whatsoever. This is hard. And most people are not successful. And people should look at the data. They should understand that. They should look at outcomes. I wrote something on 10 reasons why you shouldn't do this. And I wrote something on really understanding the economics and the expected values of doing this. I want students to build extraordinary lives. And I wrote something where we explore this notion of a 10 by 10 plus entrepreneur. So I want my students to run businesses for 10 years. So they're really committed to doing this. This is not a hit and run. I want them to generate 10x returns, so 10 times multiple of invested capital. I want them to be wealthy. And then the plus is professional and personal characteristics. I want them to be physically healthy. I want them to be mentally healthy. I want them to run great businesses. I want enlightened human capital practices. I want them to really focus on operational excellence and customer service and view those as the inputs that drive desirable IRRs, but not just to focus on IRRs, but really to build great companies and be extraordinary leaders. And to me, this is the essence of good guy capitalism. So building these amazing businesses, but also having it all together as individuals.
I'll disclose my favorite AJ Wasserstein paper, and I think you just mentioned it, AJ. It's Exploring Search Fund Entrepreneur Economics. I hope I didn't butcher that for anyone that might look this up post. But I love that paper because it talks about the reality of how hard it is to do this and how hard it is to generate extraordinary outcomes. And, every searcher that we talk to has read the Stanford study. They understand the data. They know it's 35% IRR and 3.5 times MOIC average. And they expect to be in the top decile of performers. And they think that they're a 10x outcome. But what this paper walks through is, well, what do I have to believe to be true for that to be a reality? What price do I have to buy this business at? How much do I have to grow it? What does the margin profile have to look like? And that informs a somewhat narrow approach to evaluating a business and ultimately the amount of good operations that have to occur or the amount of luck that you have to be able to generate that $10 million plus outcome. And I don't want to underestimate the impact of luck in that. A lot of those variables we do not have full control over. But what we do have control over is the business that we ultimately buy. And there's often this disconnect between the desired outcome, the reality of what actually happens, and then the types of businesses that entrepreneurs often bring to investors to acquire. And there needs to be pretty perfect alignment of those things to get to a really great and desired outcome. If you're trying to reduce the risk of bad outcomes, you have to want to do this for more reasons than just the money, because the money is the hardest thing to achieve in this. But if this is the career path that really excites you, it's the thing that you're going to wake up and want nothing more to do this in the morning, that's pretty much guaranteed if you got on this career path. But that's the place that you have to start from. I think if you start from the standpoint of, I'll be a top decile returner, I'm above average smart, and to this point, I've been pretty lucky, that's almost a recipe for disaster if you're not passionate and really committed to going down this path.
Or worse, if you're starting your path into private equity or the hedge world or others, and you see this as a way to get your bona fide operational background, you're likely going to take an anvil to the head. One of the things that really resonates with all the things that AJ has been saying today, and thank you so much for your time, because obviously with all the classes you teach and all the wisdom you profess, it's quite obvious that you're having a real impact on your students. What resonated so much of what you said, AJ, is it's a life well led. It is a journey. It is a grind, but you are forced into situations that if you've been on this primrose path, going to a top 25 undergrad program, then you worked at a top investment banker, the likes, and then you went on to go to work at BCG or Goldman or others, you don't touch the real world much. You're working hard, don't get me wrong, but you're not 360. You're not experiencing that. The lower middle market is that. It's the intersection of where the real world makes its money and where cash flow exists, and there's no financialization and there's no words about recap or EBITDA. It's just cash. And that's a life well lived because it makes you very human. And could you say it again? It's human business, or?
I think they're human-sized businesses.
Or human-sized business. Thank you. It's beautiful because it's right. It forces you to really figure out who you are and what you are. And when you come out the other side, whether you've created a 10X or not, you're a better person and you are a better mentor. You're a better spouse. You're a better parent. And you're giving back. You're just forced to give back because it becomes part of your DNA. So that is self-actualization. And there's nothing easy in life. And I've tried to always tell my kids, if it is easy, it's not going to be rewarding, but it isn't for everybody. But for those that really feel that energy, I always describe it as religion, as Anthony knows.
When you create good jobs and you treat people with dignity, respect, and appreciation, that is impact. So Yale definitely has this buzz of people wanting to be impact companies. And when they use the phrase impact companies, they really mean curing a small disease or a big social ill. And I'm not minimizing that. I need and want people to do that. But even in these small human-sized businesses, when you create jobs and you give people decent health care and 401ks, you have made an impact, a really positive impact. And that is noble. That is good work. And it's really positive and fulfilling, both as an individual and an organization.
Can I say one thing to that? Most of my lower middle market employees that have worked under me didn't understand equity, right? They don't understand the value of carried equity or profit interest grants and the likes. And it's only when you have a recapitalization or an exit and they all of a sudden get this check, and it's a big check, right? It's taxed at a different rate than they're normally taxed on their paycheck. And they come to your office or they send you an email and they say, I don't think this is right. I don't really understand this. There's a smile on my face through the phone that's like from ear to ear because they understand equity now. Like they get to participate in middle market private equity, not even knowing they were working just as hard either way because you created this great environment and created this growth experience for them. But all of a sudden they filled up their 529 plans. All of a sudden they bought the condo. All of a sudden their spouse didn't have to work. Like these are folks that never could have imagined that. That's fulfilling. I've got a gal who came to work for me named Marcy. Shout out to Marcy, who just bought her first business. She worked for me for 8 years of pro service. She then became a CEO for one of my other companies, exited that, and has now bought her own business with her own money, living in Florida, and is going to go kill it. Like for me, that's entrepreneur, but it's also spiritual. It's all the things you talked about. And she's going to impact 60, 100 people in her life moving forward with that. And hopefully somewhere, on my deathbed, she'll murmur my name.
Well, it's been great talking to you three enlightened individuals. This has been a bit of a spiritual journey. And so I really appreciate your sharing your intelligence with Search Party today. I think we're going to have to let you go. You guys have businesses to run and students to inspire. But AJ, thanks so much. And hope we can have you back on Search Party because you've got a wealth of information, both in the classroom and in human-sized businesses.
Yeah, David, it's been a pleasure. Thank you so much for including me. Dustin and Anthony, really enjoyed the conversation, learned a bunch from you.
Search Party is sponsored by Avid Bank, Boulay, Mayer Brown, and Plexus Capital. The lead sponsor is Next Coast Legacy.